Hey everyone, Anthony Venuto here with InTouch Mortgage Solutions. It's Friday, Finance Fridays, and thank you again for tuning in for another episode. On this episode, we're going to talk about the Bank of Canada's 50 basis point increase and why didn't they go 75 and what does it mean for Canadians moving forward. You won't want to miss this. Stay tuned. If you're watching this video on the Team Sessa YouTube real estate channel, once again, thank you for clicking and thank you for watching. Don't forget to leave your comments in the comment section below. And while you're down there, don't forget to hit the like, share, and subscribe button and that notification bell so you can get notified every time when we post a new video. And if you want to book a free consultation with myself or Santo, you can do that in the description box below as well. But now, back to the video. In an unexpected move, the Bank of Canada increased its policy rate 50 basis points. Now, by unexpected, I mean that the Bank of Canada and the markets had priced in a 75 basis point increase. And by the Bank of Canada only increasing 50 basis points, there are some rumors and speculation in the marketplace happening on why this happened. Now, obviously it is speculation, it is rumors, but I want to basically touch on some of the comments that were made in the press conference on Wednesday when the governor of the Bank of Canada, Mr. Tiff Macklem, came out and talked a little bit about the economic situation. Now, obviously, there are still possibilities for that policy rate to increase more.
We also expect our policy rate will need to increase further. How much further will depend on how monetary policy is working to slow demand, how supply challenges are resolving, and how inflation and inflation expectations are responding to this tightening cycle.
But I believe that there are a lot of pressures that the Bank of Canada is facing, and they are pointing to the signs of either over-tightening or under-tightening and what those ramifications can mean for the economy as a whole here in Canada.
Finally, we're trying to balance the risks of under and over-tightening. If we don't do enough, Canadians will continue to endure the hardship of high inflation. And they will come to expect persistently high inflation, which will require much higher interest rates and potentially a severe recession to control inflation. Nobody wants that. If we do too much, we could slow the economy more than needed. And we know that has harmful consequences for people's ability to service their debts, for their jobs, and for their businesses.
Now, a lot of things are being discussed at the current moment as to why the Bank of Canada only increased 50 basis points. And I'm sure a lot of you in the comment section below will let us know what your thoughts are on the Bank of Canada's recent policy decision. But it is important to point out that he had stated that the end is near, however, we're not there yet.
This tightening phase will draw to a close. We are getting closer, but we're not there yet.
And this is a very important sentiment from the Bank of Canada. It is very important because of the fact that the markets had priced in a 75 basis point increase. And generally, when we see the markets pricing in a 75 basis point increase, the Bank of Canada or the central bank would usually follow suit with that as it is already taken into the numbers or baked into the pie. But something happened here, and I don't know exactly what it is or why the Bank of Canada maybe only went up 50 basis points. What will that mean for the December announcement? Will they go up an additional 50 basis points? And what will it mean for 2023? For many, they believe the end is near and that obviously the Bank of Canada has increased rates significantly over the past 6 months.
Today, we raised the policy interest rate by 50 basis points to 3.75%. This is the 6th consecutive increase since March.
And they have done so at a very rapid pace with some major moves. And this obviously takes time to have an impact on housing, which it had an instant reaction, but on other parts of the economy, like labor, which is still very tight. And he did point to the fact that there is still a lot of excess demand in the system.
The economy is still in excess demand. It's overheated. Households and businesses want to buy more goods and services than the economy can produce, and this is driving prices up.
And they're hoping that they can change the expectations of Canadians to basically confirm to them that, as Canadians, that we will basically bring inflation back down to 2% target. And they're giving us this window that they think that inflation should be right around 3% by the end of 2023 and stabilize at 2% in 2024.
Putting the global and Canadian outlooks together, we expect inflation will hover around 7% in the final quarter of this year, fall to around 3% by the end of next year, and return to the 2% target by the end of 2024.
But obviously there is a lot of work to be done with the Bank of Canada. Now, just as a refresher or recap, as we are fully aware, the Bank of Canada has very limited tools in their toolbox in order to tackle inflation. And obviously interest rates are the most important tool that the Bank of Canada has. And I do think that, aside from the fact that the governor of the Bank of Canada has messed up a few times, or the central bank has messed up a few times over the past few years, case in point.
Our overriding message to Canadians is that the bank will be there to provide monetary stimulus for an extended period to support the recovery and to return inflation to the 2% target. Interest rates are very low, and they're going to be there for a long time. We recognize that Canadian businesses are facing an unusual amount of uncertainty. And so we have been unusually clear about the future path for interest rates. If you've got a mortgage, or if you're considering to make a major purchase, or you're a business and you're considering making an investment, you can be confident that interest rates will be low for a long time.
This is basically back in July of 2020 when he came out saying that, hey, we're going to keep interest rates artificially low for a very extended period of time. And this forward guidance has now brought us into the current situation that we're in now, where we're facing higher interest rates, and many Canadians will find it challenging, to put food on their table. Are they going to heat or are they going to eat? That is a major concern as we enter the winter months. And the governor did point to the downward pressure that Canadians are facing when it comes to their mortgages, their businesses, and obviously their overall debt servicing ratio.
We are mindful that adjusting to higher interest rates is difficult for many Canadians. And many households have significant debt loads, and higher interest rates will add to their burden. We don't want this transition to be more difficult than it has to be. But we remain focused on our mandate. Higher interest rates in the short term will bring inflation down in the long term. And getting through this difficult phase will get us back to price stability and sustained growth.
So I want to basically point out that for Canadians that have a variable rate mortgage, or even those Canadians who have a mortgage with that trigger rate, it is important to keep an eye on that trigger rate and making sure that if you have basically breached that trigger rate, what actions you should be taking. And we have covered that very extensively on the channel, and you can feel free to go back and watch some of our videos that we've talked about the trigger rate. But most importantly, you will need to increase those payments if you're approaching that trigger rate point, and or basically continue to add a lump sum of down payment or an additional source of funds to the mortgage so that you can basically pay down some of that principal, and or you can basically lock into a fixed rate mortgage. And one additional piece of advice for those clients with trigger rates is also to make sure that they're actually increasing their payment frequencies, as this will also help basically increase or widen that window for that trigger rate. Now, for those Canadians who have an adjustable rate product where your actual payments are changing, you're going to feel these changes right away. And for some Canadians, basically the math will work out to around $29 per $100,000, for example, on a 25-year amortization, if you are looking at the current change right now going up an additional 50 basis points. So that means prime basically has gone from 5.45 to 5.95. And for those Canadians paying attention to those mortgages, we would have seen an increase as of right now for about $191 on average per 100,000 on a 25-year amortization since we started increasing, or since the Bank of Canada started increasing interest rates back in March. So there's a lot of conversations happening here around the Bank of Canada. And I want to know your thoughts. Where do you think the Bank of Canada will be heading? And if you've had a chance to check out the press conference, what do you think Governor Tiff Macklem is alluding to? because I hear the sentiment right now that yes, there is some room for policy rates to increase further, but I do believe that there is a lot of pressures that maybe they're not telling us, or something that they've basically not disclosed in the press conference. And if you listen to some of the questions, it is very fearful of a recession, and the Bank of Canada doesn't want to overshoot, and they don't want to under-deliver as well. They need to find that happy balance in order to avoid a recession. And basically, when will this pivot happen? When will the Bank of Canada basically stop increasing interest rates? And what will have to happen to inflation and inflation expectations when it comes to Canadians? But we'll leave the video here. We hope that everyone found the video helpful. If you do have any questions about your mortgage or pre-approval, please feel free to reach out to us here at InTouch Mortgage Solutions. And do us a favor, if you like the content that we're producing here at InTouch Mortgage Solutions, please don't forget to hit the like, share, and subscribe button. Hit that notification bell so you can get notified every time we post a new video. But until next week, have a great Friday, and thanks for watching.